Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Vechain, taking a look at the most recent price action and what we think is likely to happen next. As I get into this video, if you find it useful and informative, smash that like button, I do appreciate that. And if you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications and you will stay up to date with all the videos that we do here at Cheeky Crypto. And right, with all that said, let's get right down into this, right? Here we have Vechain paired up with USDT on the daily chart, and Binance is a data source. We're only really starting here just to kind of note that we have had a really good run to the upside, up here at 41.49% so far, and this pretty much is from the 30th of December 2022 through to the 14th of January 2023. Now, on this daily chart, we can acknowledge, and we probably should acknowledge, that the RSI, the Relative Strength Index, is way up here in the overbought area at 81.28, really, really high. Now, if we take a look at this, we can, of course, acknowledge previous high points. We have come up higher here on the RSI. We'll take a look at that one right in there, whilst at the same time coming down into lower highs. This is bearish divergence, and we should be aware that this is not going to be positive. Now, of course, we can take a look at the previous highs all the way over here, and can also acknowledge that we are going up higher on the on the RSI, whilst at the same time it's still setting these lower highs. Okay, so not overly the best kind of news to kind of talk about on the daily chart. So just one of those things we should be aware of. You can also acknowledge that the 200 EMA is up here, so we haven't had a bullish cross on the 200 EMA just yet either on the daily chart. So again, all of these things are still bearish, even though we've moved 41% courtesy of the DXY. Not really so much in the way of demand coming on in here. I don't think I've got, have I? Let me see if I can find it. Yeah, I do. Let me remove this one, throw the volumes on here. You can see the volumes, they are still also on a bit of a decrease down here and here, so there isn't a huge amount of volume coming in, although there is a bit of a boost in the volume since the lows around December to the upside. So we have these kind of micro trends going on. That's a bit of a positive. So it's not all negative or anything like that, but there is some positives on the smaller timeframes, of which I want to dive into right now. So here we have Vechain paired up with USDT on the hourly chart, and Binance is the data source. Now, if I just get rid of those stochastics for a second there, we can kind of just reflect on what this potentially looks like. This here is, I believe, to be an Elliott wave triangle. Elliott wave triangles, they only actually appear in two places, wave 4s or wave Bs, and I think this is a wave B of a wave 4, which is actually quite ironic because it does put the Elliott wave triangle right in the slap bang of the middle of the wave 4, but we can't get too carried away. Now, there's a couple of things here that could be in play. And I want to talk about both of those so that we can be fully prepared on what we kind of think is likely to happen. And, and kind of, address the bullish and the bearish kind of scenario on the hourly chart here. So let's take a look at the Elliott wave triangle to start with, right? So if we actually grab hold of the Elliott wave triangle, we can kind of see that we had this kind of move A, B, C, D, E, and then we saw this kind of break to the upside. But that's only if you take it to the upside here. If we actually think about this move coming on down, let me see, A would be there, we'd have B coming in, I think. If I take this one, then C, then D, then E is basically here. So if we take a look at it, we actually have this pretty typical, it's quite difficult to say typical when it comes to an E wave. E waves are unpredictable, but typically they like to kind of surprise you. And that's kind of exactly what we saw right in here, right? So you saw it explode out of this triangle wedge pattern here to the upside, and it went up to a typical kind of area that you'd expect it to, which is highlighted in this kind of yellow box area right in here, okay? So let's just kind of talk about that first. So if we highlight this, it's basically 2.118 to 2.146. That's the kind of area there. Now, in order to kind of get to that target, we have to assume that we're having some kind of structural move to the upside here, all of which is considered a B wave before we move on down. Now, with this, we'd assume that actually this looks like a ending structure of 5 waves in there. Not too unusual to see an impulsive structure at the end of a wave E. So we kind of want to see that. So 1, 2, kind of 3, 4, and then we're up there in 5, right? And we can kind of see that we completed this 5-wave structure right inside that E wave. So we want to check to see if it is that, and confirm that it is 5 waves. It's going to be important to us. So like I said, E waves are the ones that kind of catch a lot of people out. They're very, very difficult. We do hit that right on here, so we probably have some kind of wave 4 and then some kind of movement to the upside in there. So we'll just break this down just to the 15 minutes. So here you can see the top of our wave 3. So if I were to plot this in, it would be basically 1, 2, 3, 4, and then up here in 5, right? So what we want to do is we want to check to see, and this is why we had to come down here in the 15 minutes, we just hit it right there. So basically our 1.236 is the minimum expectation on that fifth wave, and you can see that we hit it right on here. I'm just going to do some sense checks. We hit a high of 2.136 and the high is 2.136 right in there. So interesting, right? We just nailed that one. So real close targets. Actually, was it might actually be a little bit short. Let me just see that, check that again. Just want to check one quick thing. I don't want to be super accurate here. Don't want to be biased. Yeah, there you go. 2.136, and our candlestick went to 2.136, so we did hit it. It looked like an 8 for a second, so I just wanted to check that again. There we go. So we nailed that exactly as us, and that there is then our top of our fifth wave movement. So if I come back up into our hourly chart here, we can then take stock of that as basically coming down here for wave 4, up there into wave 5. We complete the E wave triangle, or the Elliott wave triangle with the E wave coming up into our high expectations, which was 2.118 to 2.1646. So that looks like we've kind of completed everything there. This means that essentially this B wave could potentially be complete. We have an A, we have our B, and now we can come down in C. And if I go ahead and snap this on and just move this across here a little bit so we give it some space, and if we move this over to our E wave high point, our target is going to have to change. Our fourth wave target is going to have to change just a fraction higher. So we're going to mark this up at 1.952. Okay, we're going to pop it right in there. Okay, so that's going to be our C wave expectations, which is going to be our fourth wave expectations. But we are going to basically expand our yellow box, because sometimes C waves, they like to go to the 1.236, which we have just down here, right in here. And I'm going to just also move our line to this one, and it's basically 1.912. Okay, I'll remove the fibs, and there we go. We end up with our targeted range right down here between 1.912 and 1.952. Okay, so those are basically kind of this B wave structure completed. Our C wave yet to play out, taking us down into our fourth wave lows, which will then take us up into our higher fifth wave expectations. So let's take a look at that. If we do come down to our minimum, which has changed, so we'll change our fifth wave targets as well. We need to adjust this just a fraction more. There we go. Okay, that means that we are aiming between the 1.236, which is right here, and obviously the 1.618. I'll go ahead and remove the fibs, and we have our targeted range right here at 0.02224 and 0.02315. That there would be our expectations. I'll put these dashed lines right on there as well. Okay, the invalidation of our fourth wave triangle here, and the lows. So in order to prevent us coming down lower in this fourth wave, we can't, or we would have to push up higher than 2.169 cents, okay? So that's this red line. So this red line here at 0.02169 is essentially going to be the barrier as to tell us whether or not we are still in fourth wave or whether or not we're actually going up into the fifth wave. But here you can kind of see a pretty clear picture. We've got to come down in order to go up. Now our stochastic RSIs, if I will open, we can see that we are overbought on our hourly chart here, but we are oversold on the 4-hourly chart. So we can see those two things. So essentially we're looking for this small move to the downside, the wipe that momentum out, basically correct down into our low ranges. And then once they are done, we'll be looking at moving up with the 4-hour chart into our fifth wave expectations. That's kind of essentially where my mind is at here on Vechain on this kind of hourly chart. And again, you know, there isn't a lot to be confident on once we kind of finish this structure off. We've got two options. We're going to move down in 3 regardless, right? There's always a 3-wave structure coming down afterwards, so we're always going to be looking forward to that. And because we did 5 waves to the upside, my expectation is to at least do a minimum 5 waves that mirror that of the first. So if we go up, let's say 50%, then we would come down probably 88.2% or anywhere between 50%. We'll aim for 50% of a retracement and then go up another 50% based on the fib levels. So for example, if we were to hit this higher expectation and we were to measure this entire distance down here, we move this over to, let's say, the support line that we come down to, hypothetically, then we would move up towards the 2.5 cent. That would be my kind of minimum expectation overall. So we won't talk too much about what could happen after this kind of corrective structure, but when we finish the 5-wave move here, I'm expecting 3 waves down, and it's as simple as that, really. And we can't just go 5 up and then continue moving up. You have to have these corrective structures, and that really is where we see that daily chart coming into play, because we are overbought on the daily, we're overbought on the 20-hour, the 16-hour, the 12-hour, the 8 hours just coming down from the overbought area. The 4 hour has some progression upwards still to go, so not too concerned there. And obviously we know where we stand with the hourly. So for the most part, expect some short-term volatility when it comes to Vechain, but not expecting terribly too much. If anything, I am expecting us to obviously pull back down and then kind of rally ourselves back up into this high range. Once that's done, then I'm going to turn super bearish again on these smaller time frames as well as the larger ones, where we look for these bigger corrective structures to the downside, where we can obviously then look to accumulate more and ride into the next kind of 5-wave structure to the upside. If you found this useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Don't forget to join us down in Discord. Links in the description down below. Other than that, guys, have a fantastic day, and I'll catch you all in the next one.